Hello, everybody. Chris Martinson here, and today we're going to be talking about finance and economics as part of Finance U. Remember, anything that you see in this video and all resources available at our websites or affiliated websites are not intended as or construed as financial advice. This is for educational purposes. Remember, if you have a financial decision, please consult a financial professional. We are not attorneys, we're not CPAs, we are not financial managers. As well, we do our best to be accurate, and everything we represent is as accurate as we know it to be. Now, let's turn to our program. Hey, everybody. Chris Martinson here. Welcome to Peak Financial Investing and Finance U. We're going to discuss all things finance. Hey, Paul, good to see you.
Good to see you as well, Chris. Good to see you.
Well, as you saw, I have this little, at the time of this recording, there's this little debate going on with Doomberg, right? And
Yes.
a little surprising because I had to do something I haven't had to do in a number of months, and that is I had to break out my data paddle. Okay.
I like that.
You don't want me to have to break out the data paddle, okay? But I love the data. I love how you bring data to what you do as well. It's really important. I mean, in business, you have to measure things. I mean, this is the thing I decry the most, just to get off script before we even started, is the way in which we've lost the ability to have conversations because we don't have meaning in our words anymore that we can agree to, right? And I had to put this out in the context of the German farmers, right? The way they were painting it in the media was they said, oh, well, they're unhappy because some subsidies are being removed. And if you saw that piece, for anybody who didn't watch that, the subsidy being removed was a tax they didn't put on the farmers that they wanted to put on the farmers, but because they hadn't put the tax on, they called that a subsidy, when the definition of the word subsidy is money given for a purpose, not money not taken away. Right? But I mean, that's what happens. We can't even have conversations anymore because the meanings get all messed up, and that's true across the board. But in the energy space, it's very hard to have a conversation now because we don't, what's oil, what's a petrochemical, what's petroleum, what's a reserve, all these words have been changed. And I think on purpose, because I don't think they do this for our benefit.
No, it's all about narrative. It's about obfuscation. It's about, narrative. Really, it is.
Yep.
Stay away from the numbers and let's talk about nice emotional little terms that work.
Yeah. Don't worry your pretty little heads.
Right.
All right. So let's go there. We're into markets for the moment. I'm staring at some charts over here to the side. The Dow, the S&P, NASDAQ, Russell, kind of just sort of huge run up through from all of November, most of December, sort of parked here for the first week of 2024. But to me, Paul, I think we're still working off. Somebody freaked out back there in October. I don't know what happened, but what I see is a pattern where they threw a lot of money into the markets because stocks went up, bonds went up. But and then the narrative is, oh, investors were cheered by soft landing, all of this and that. But then at the same time, still staring at my charts, I don't see anything on the commodity side, particularly Dr. Copper's out of the game. Oil's not in the game here. Natural gas barely in the game, although we have some cold weather coming now, might change that a bit. But normally, the pattern you would want to see for real recovery would include commodities, but not this time.
Right.
That I can see.
Not this time. And I think a lot of the year-end run had to do with, the Fed makes this massive reversal. Financial conditions ease dramatically. And if you're a portfolio manager, it's one thing if you're working with an individual and you're having that communication together about, all right, this is the reason we're positioned the way we are. We're trying to play by the rules that are forced upon us, and we might underperform the markets a little bit. But if you're a portfolio manager, you've got to chase that market going in the end of the year. And I think that's the reason we had near panic purchasing with this straight run up into the first week of January or to the last week of December. So there's a lot to be said about, historically, statistically speaking. So however the first 10 days of the year go, 7 to 10 days of the year go, so goes the rest of the year. Now, I think everybody knows about it. Now, you take into consideration a massive run like that may not necessarily be the case. But when you have financial conditions ease as much as they did, and the narrative changed so quickly overnight, instead of higher for longer, immediately we changed into, oh, we've got cuts coming. We've got,
Mm-hmm.
so it's possible that this momentum could carry through May or June. Now, I think we were talking about this earlier. I can show here this yearly candles of the S&P 500, which does show that we've got some pretty major resistance in the S&P 500 here at this level we're sitting at right now. So I think it's going to take some time to work through this. It's possible we could fail here. I wouldn't be surprised to see the market pull back into the end of January or February, but with financial conditions easing and fiscal stimulus that's going to carry through, and a Treasury Secretary that very well could play politics as much as they can to keep the economy running hot. If we do break through this, that's going to cause a lot of repositioning in the market, and that may get us that blow off top that people talk about, and as an investor, if you're positioned wrong, you worry about. But it's still a time to be cautious.
Can you pull that back up again real quick?
Yes.
Because I think it's just, maybe I'm making patterns out of nothing. But what I'm seeing here is interesting so see there in 2008, that big red candle.
Yes.
That's where the Fed decided, gloves off, like everything prior to that red candle, their balance sheet was, everything ran differently, right? We'd accumulated only 880 billion on the Fed balance sheet by that time through all of history. When they did financial easing or rate hikes, the opposite, tightening, prior to that red candle, it involved pushing cash into the market, taking cash out. Ever since then, though, all that's just like candle up, stagnant, up, stagnant, up, little down, up, right? All of that is because every time there's been a tiny little wiggle down, the Fed has stepped in with more easing, more balance sheet expansion, changes to the rules where they no longer have to withdraw money from the markets in order to create rising interest rates, which is called tightening. It's not, right? The Fed version of tightening now involves giving more money to the big banks as a consequence, because they just pay them more interest on the money they hold for the big banks. It's crazy. So that, I just want to point out, what everybody thinks of as normal from 2008 and onward is one of the most unbelievable periods of interventions ever. But that is the game. But this is why it's important here, from a finance viewpoint standpoint. I think you need to know that plumbing. You need to understand what that is. Because I look at the plumbing right now and I don't see tightening.
No.
I see the words around tightening, but I don't see the tightening. So I think the Fed is afraid to actually tighten. I don't think they want to disappoint markets. I think they need asset prices to go up and to the right like this. I think that's the game, and it will continue until something breaks.
That's right. And, from another perspective, and just kind of highlight this is annual yearly chart, candlesticks going from 1997 all the way up till today. Of course, it shows I've got some space at the right-hand side. But, my question would be, is the Fed so terrified that if we fell here, that we have a sell-off like occurred in 2008, or a sell-off that occurred from 2000 to 2002, that, hey, we're at resistance. We've got to get through this resistance, because the stronger that resistance is, you can look back going to 1997. This is a strong line in the sand that's unmatched. We don't necessarily have a period of time going back to 1997 where you've had this strong of a resistance in the overall market. So if you fail here, then that's a good indication that there just aren't any buyers left. So is that one of the reasons? I don't know, but is that one of the reasons why the Fed's going to step in and say, okay, we can't let the markets fail here. We've got to keep this going, because if they do fail here, hey, it's going to get pretty ugly going into the election. And what else do they have what else does this administration necessarily have to stand upon?
Yeah, well, one last thing I was going to point out on that is that makes a very straight line. Those candles, I could draw a really straight line through them. That was a log chart you had. So that means that this is an exponential. It's not like, oh, look, the stocks kind of go up and to the right at a 45-degree angle. People, this is a log chart. That means that these things are going up exponentially. Because that straight line on a log chart is exponential growth. So that's what the Fed's like, oh, we'll just do whatever it takes. to keep exponentially increasing asset prices, right? There's another
Right.
chart we could pull up which shows now that the top 10% of households in the US own 92.5% of all the equities. So when we're talking about that chart going up and to the right, we're really actually only talking about something that directly affects 10% of the people. The other 90%, they just look at that and go, what does that have to do with me? Right?
Right. Of course, in talking about narrative, they're going to put out, oh, 50% of the populace own stocks. But like you said, the other 7%, 6 to 7% own minuscule amounts. They own minuscule amounts. It's the top 92, 93%. So they're focused on the few individuals, and those few individuals, many of those individuals happen to be very close to the printing presses and to the halls of power.
Yeah. Yeah. Well, so when I say something may break, of course, at the time of recording this, the German farmers are in big revolt. Apparently, the farmers in Poland and Holland, of course, they're joining in. And I say, of course, because the Holland farmers have been protesting for a long time. Um, but it's just this general idea, Paul, that the little people are getting squeezed,
Mm-hmm.
and that squeezing is about to sort of erupt, and
Mm-hmm.
you can feel it. And it's been fascinating to watch because these are farmers. I consider them generally salt of the earth kinds of people in any country you go to. They have they tend for animals. They have to be really smart. They work all the time.
Yes.
It's unbelievable. They're the same everywhere in that respect, right? So, uh, as soon as the press in Germany decided that they had to pay attention to this immediately, they might as well have been truckers in Canada.
Yeah.
Racists, ultra far right, on and on and on, right? And I'm just like, these are your farmers. These are the people who grow your food. So are we that out of touch that the people who write these articles just literally have no clue where their food comes from?
Mm-hmm.
Or are they smart enough to have figured that out? It's just they're more slaves to the narrative. I don't know what's going on. It's very bizarre. Very
I
bizarre.
think they're, just my opinion, and I've wondered about that for a while. I think they're just so removed because the further you get removed, when you get into the city, you've got all the conveniences that are there. That's where a large amount of these individuals are located. They're educated very well. They tend to look down upon the farmers. The farmers tend to look down upon them. What is it? Israel, it's a mandatory service in the military. I think it would be our country would be much better off if we had a mandatory service and working on a farm as part of the college education for about a year. That's just what you do. Go work with farmers, get close to the soil, understand how that happens, how these farmers care about their livestock and how important they are to everyday life as we know it. I think they're just so far detached. They've never walked in those shoes and they don't understand, and they just assume that these farmers are just a bunch of rednecks, unfortunately.
That would be such an expensive program because think how much we'd have to pay farmers to put up with that aggravation.
That's a good point. The farmers might just quit producing food to have to
Yeah.
deal with every day. Yeah. That's one of those things that's great in theory, horrible in application, right?
Yeah.
So
Good idea, though. I support it. Got a few wrinkles to smooth out.
yes. But as far
Uh,
as the markets go, I mean, we got interest rates are trying to creep up just a little bit.
yeah.
That nothing major, no major moves there. Commodities aren't participating. This may be another, easing of financial conditions and kind of fear of missing out move by the overall market. Because if we do break out of those ranges, you're going to have a lot of repositioning across the board. And then you've got a lot of pensions, unfortunately, I try to think of all of the things that could cause investors to transition. And, a lot of pensions are going to be struggling after last year's 2022's, massive underperformance with stocks and bonds. So they're behind their return mandates. So there's a lot of power, there's a lot of forces that are going to be putting pressure on this administration to say, hey, bail us out, right? Kick this can down the road a little bit longer. So we can blame it on someone else. And the sad part is we're starting to see massive intervention, and that can stops rolling a lot quicker than it did before. And so just not a lot to be said in the overall markets. From my position, we have to assume that the path of least resistance is going to be higher, but also look for some of those really good opportunities. because
Mhm.
I like, I think I've mentioned this before. Again, this is not a recommendation, just having a conversation to put on the radar. But South America is very natural resource, agriculture, resource heavy producer. If this is kind of Goldilocks best case scenario, and we're going to have this global, expansion that's going to last 3 or 4 more years, those are some of the most underpriced areas around the world where you can get decent dividend yields and you have a lot of upside potential. And again, if we see this market transition to where this is Goldilocks scenario that's sustainable, then you're not just going to have the safe haven of your top 7 or 8 stocks, 7 to 10 stocks on the S&P 500 that are going to be the leaders, right? You're going to have overall participation in the general market. And we've seen that a little bit with the rally that occurred November and December, but not convincing enough yet to say the worst is behind us. So this is one of
Mhm.
those areas where you have to play the game by the rules that are forced upon us, but you also have to have your exit points ready very quickly and just be nimble. And there's no way that we're going to be able to navigate, anybody's going to be able to navigate this perfectly. They can state it confidently, but we've just got to be open-minded and let the market tell us what it wants to do here over the next 60, 90 days.
Yeah, well, I mean, it's been a reasonable bet since 2008 that the Fed's going to do whatever it needs to do overtly, covertly. I'm convinced that right now they're like, oh, we're rate hiking. That's the overt side. Covertly, you look at the financial conditions index and find out it's looser than ever, right? So, which is it? How did that happen, right? Um, and we know that there aren't a lot of loans going into commercial real estate right now, so there are some plugs in the overall system. So where's all this financial easing coming from? It's a broad condition index, and with some notable holes in it. So we have that going on. And then I live by the anecdote. Maybe I shouldn't, but Paul, I see constantly now videos of, say, 40 and under people just really crying about how hard it is to get by, if not
Mm-hmm.
impossible. One, sometimes two, like good jobs aren't enough to even begin to float things, in any particular market out there right now. So I know things aren't easy at this point based on what I'm seeing. So how long can we hold that narrative together? And then we come into this election season, which is always
Mm-hmm.
a good reason to spend more and print more from a
Mm-hmm.
DC Fed perspective, respectively, right? So
That's
how do you
right.
see that factoring in that can they keep it covered up that people are really struggling through the election?
I think that they can keep the narrative going through the election. But one of the things that I mean, this is just on a small scale with the individuals that I'm talking to locally, but we're starting to see, at least locally, individuals that were supportive of the administration. Hey, they didn't necessarily like Trump's personality. And I don't necessarily want to get into the politics, but this is the reality of the situation. We don't necessarily like Trump's personality, so I'm not going to vote for him. So maybe they didn't vote because they couldn't vote for either or, and then you've got some that voted against, right? But I'm starting to have individuals that'll come up to me because they feel comfortable talking to me because I take my stance as I'm a political atheist. I just want what's best for the country. And they're saying, hey, I can't continue to live this way. What can we do? We've got to make some changes. So I think they can keep the narrative up into the election from a media standpoint because a lot of those individuals are really wealthy, they're connected. As long as the market's up, they're feeling good, they're reporting good, their advertisers are good. The question is going to be what actually happens when people hit the ballots this fall, right? You can spin the narrative, you can make the numbers look great, you can revise them in hindsight, but the question is, will the American people vote based upon the pain that they're experiencing, because there's a tremendous amount of it. I mean, my daughter just graduated. Fortunately, she's got a good job, but a lot of her friends are out of school looking to purchase homes, and they're miserable. They're like, I didn't understand that it was this hard. I didn't understand that it cost this much to live. I didn't understand that, how expensive it is to live in a home. So, I think people are slowly starting to wake up because the reality for 85% of the population is things aren't getting easier. Costs are not coming down. Yeah, you can celebrate about disinflation and hey, inflation's going away, but those prices are sticking right here And the only thing that's going to make it easier for a lot of those individuals is deflation. But the problem is if we get that deflation, then you get more layoffs because corporates are going to have to protect their profits. And then there's pain either way.
Yeah. I mean, if our average grocery bill now is $500 and inflation goes to zero, it'll still be $500.
That's right.
Right?
That's right.
Again, we need to share the terms, but this is part and parcel. I mean, for people who, I mean, the president himself obviously is confused about all this stuff. He doesn't, he can't really string the concepts together. But whoever's writing his tweets for him does not understand these basic concepts. I think we have profound ignorance about very basic concepts. So I'll indict the educational system at this stage or something, right? Because we should all know about inflation. That's why we do Finance University here. Everybody should know about these topics. Oh, why should I follow the Fed? Because they're going to completely dominate and shape your future, right? They should be, you should be waking up every day saying, what is the Fed doing, right? Because they're doing stuff, right? Throwing generations under the bus, stealing from the many to give to the few, making sure that stocks always go up and to the right. That they have the mandates they talk about aren't the ones that they actually seem to attend to. Stable
No.
prices and full employment, right? And people are starting to lose faith. Of course, I'm in a weird, like, I've got a strange sort of crevice of the audience that I talk to, but it has not gone unnoticed that in the last 10 months running, the BLS has had to revise its employment figures downwards 10 times out of 10. If you were sitting there at a blackjack table equivalent and they were flipping a coin and it came up heads 10 times, you better start thinking this may not be a fair coin.
Right. Right. And if you're on the other side of the house and you're winning all of these hands, they're going to be standing over your shoulder watching what you're doing and potentially remove you if they can't figure it out, right?
Mm-hmm.
But
exactly. No, I mean it's just narrative control, and so it is what it is, and people still have to navigate the markets, right? And people are, you work with people every day who, it's you got to do what you got to do. So, that's what I like about your approach is, it's weird, but this is what it is, and it's kind of a global thing because I'm staring over at my charts right now. Again, if you stripped off the names, I can't tell the difference between the DAX, the Dow, the S&P, the Euro stocks. Same chart, identical, tick for tick. It's just the world we live in right now.
yeah, mostly the NATO countries are pretty much operating the same way. But, it boils down. I had a conversation with an individual this morning and they've been absolutely terrified. They didn't know what to do. They'd never taken the time to actually understand the approach that we operate under, because what they're looking for, and this is the mistake that a lot of people make, they're looking for perfection, right? Well, there's nothing there's no investment strategy that's perfect. Warren Buffett's been a legend historically, but you go back and look, there's periods of time where he's underperformed the market. There's periods of time where 5 to 7 years he's gone sideways. Market collapse in 2008, he didn't lose as much, but his strategy is not designed to completely miss as much. So he did a great job, but he was still down 36-38%, somewhere around there. So when people get scared and they don't know what to do, they're either looking for somebody that'll tell them what they want to hear, but then they're wise enough to realize they don't trust that individual, or they're looking for perfection. And if they're looking for perfection, they end up performance chasing. So this individual is finally to the point, they sat down and said, okay, I've communicated with them enough about how we've navigated the past several years. And they're like, look, do you think this is a great time to leave CDs and invest? And I said, no. And they said, do you think this is a great time to stay 100% in the CDs? And I said, no. The reality is you've got to consider what's the most damaging in the end. So what we've seen since the 2008 crisis is they have not allowed deflation to occur. They've crossed many boundaries. Mm-hmm. They've blown through what was considered to be operating with integrity as a government. They put the finances and creditworthiness of our country at risk with fiscal stimulus, all trying to bring about inflation. They're telling us that they want to bring about inflation. Then they game the numbers. to make it look like the inflation's not as bad as what it seems. And I said, you have to consider that that's your greatest enemy. And yeah, if everything works out great, we're going to have a deflationary event. Markets are going to drop. Those that are prudent and prepared are going to prepare for that. And I think ultimately we're going to end up there. But the problem with that is that's going to mean all of these centers of power are going to lose their position because the American people are not going to accept them being there. Those institutions would fail. The other individuals that are prepared would step up and step in. So my argument is look, you just got to find a strategy. You got to work with somebody that you trust that's not going to claim that they can get it perfect. You understand they're not going to get it perfect, but they're going to fight tooth and nail every day to mitigate that risk and utilize tools that'll help keep you in the right position the large majority of the time and understand the weaks and strengths of the strategy, right? So I think that's where investors have to get to. And what I'm seeing is people are understanding that's the only way to navigate this now, because you've got a Federal Reserve that comes out, oh, all the media was talking about Chairman Powell. Well, he's going to be Volcker. He doesn't want to be Arthur Burns, and make the same mistake. And, and a lot of individuals, including myself, I'm cheering. I'm like, oh, this guy's serious, like higher for longer. I mean, he's really going to deal with this. And then all of a sudden, he turns and does a 180 and says we're going to start cutting interest rates out of the blue. And then those that refuse to believe a word he said and said, hey, they're just going to run in the inflationary direction and protect this market at all costs, even at the expense of future generations, were right so far. And that's going to make it even more dangerous, Chris, because what's going to happen is when this stimulus doesn't work anymore and they can't kick that can down the road any further, that's when there's going to be few people left that are even trying to manage risk. And the largest majority of people are just going to be wiped out, because at some point we're going to get a major reset in the markets. We just don't know when that's going to be.
Well, I don't think it'll come except through an event of some kind.
Right.
Right. How would I share this? Oh, I know. I'll do this. It'll just be a little thing that'll show up in my, yeah, I think if I do this, oops, wrong one. Hold on. I'll get there.
Nice abstract.
Oh, thank you. Screensaver. So this from OSINT Defender, which is it's an okay channel. I don't totally subscribe to everything, but they're saying here U.S. defense officials and members of the Biden administration have reportedly begun to understand in recent weeks maybe negotiations have failed here, and that there may be a major regional war in the Middle East may soon be imminent. Yeah, that's no bueno, right?
Yes.
So if something like that happens, I would predict, and I'd like to hear what you think. I would predict, obviously, there's a lot of chaos that's going to happen right away, right? Oil prices, this, that, but mysteriously, the markets will actually be stable and possibly go up and to the right. And I base this on Desert Storm 1, Desert Storm 2, post, the Israeli, surprise attack of October 7th, right? It was down for like an hour or two on a day and off it went, right? So when we talk about this support for the markets, that's my prediction, is that they will again support this, but and do whatever they can so to show that markets aren't concerned. I don't know why they spend so much. They worry about that a lot. They want the markets to always show everything's okay. That's fine. But within the context of that, if a wider Middle East war breaks out, my prediction would be this one gets out of hand, right? And we discover that oil infrastructure is surprisingly fragile and explosive, right?
Right. And that would be devastating for corporate profits. It would be devastating for inflation, because now all of a sudden, and look, that's an area outside of my expertise, but I'll, take a chance of just kind of be willing to look like a fool with this. But if you've already got the situation with Russia and Ukraine, and I haven't dug into the headlines, but basically I've been seeing headlines here recently about Sweden trying to prepare their citizens for war because they're wanting to come into NATO. I don't, you may know something about that. You can talk a little bit more. I don't. I've just seen some headlines and not dug into it. But if we had a major, war break out in the Middle East, I mean, that's going to interrupt shipping, which has already started to interrupt shipping. That's going to end up being inflationary. You have oil prices that are going to skyrocket. That could be the death knell for a consumer that's really, when you look at credit card debt data, the willingness to take on debt. It's like the government's willing to take on tremendous amounts of debt and risk the future for the short term. And they want to say that the average citizen is, but is it out of necessity or is it out of just a desire to, no fear of debt? That is something that I think, regardless of how the market reacts in the first week or two, is something that could be the death knell for an economy that's already running on fumes.
Yeah, I think that external forcing function would be like if oil did spike in price for a period of time, and the
Mm-hmm.
price spike coming because there are actual supply shortages. Both the
Mm-hmm.
price has a bad impact, but also the just the lack of oil has an impact. And by the way, I talked about this in my scouting report for people who are subscribers. This what we're doing here is public, of course. So I'll just put this up here too because it's important context. Which is that this just came out day before yesterday on oilprice.com. So when the United States went in and did a smash and grab on Iraq, coming in because of weapons of mass destruction that did not exist. One of the things we did was came in with a lot of the Western oil companies. This is fascinating. So it turns out that ExxonMobil just had to back off. They left the West Kurna 1 field, which is when I say the West Kurna 1, I might as well be saying Gawar minus a little bit. This is a super giant major, 43 billion barrels of proved reserves. This thing's massive. There aren't that many like this. And so what do they say here? However, China and Russia have come in and made partnerships here. And so we're seeing what I consider to be a very, very rapid loosening of Western grip in the Middle East. And that then becomes the context for this, right? Because what is
Yes.
this really about? Is this really about trying to protect a couple of ships from a couple of drones? Or is it really about this, which is the loss of Western influence from the prize, which is the Middle East? The Middle East, let's be clear, is the prize when it comes to oil. There's nothing like it anywhere else on Earth. Nothing. So all of that said, I mean, there's these big things sort of percolating. I think investors have to be ready for that. You have to have an understanding of that. I like to have plans for these things. Plans never survive contact with the enemy, but I do have a plan for what to do if oil really skyrockets and all of that. I think it's important to at least consider that
Mm-hmm.
might happen because those are forcing functions that then prevent the Fed from just printing more and doing whatever it wants because nobody's really paying attention, right?
Mm-hmm.
You
That's right.
can't print oil. Nothing you
No,
can do about that.
you can't print oil, you can't print food, and in spite of 3D printers, there's a lot of supplies you can't print because
Mm-hmm.
you got them in time. You can print some supplies, but it still has a supply chain, not with the
Yeah.
instant ability that you can the printing presses. That's a pretty big deal. I haven't seen that, Chris. That's a sea change based on what we've seen since Bretton Woods agreement in 1971, 72, 71, I believe it was. That's a that's a to me, I would think that's substantial and has to go along with those other headlines because now Exxon just walks away and China has control of this major resource now.
Mm-hmm. And China has full control of Afghanistan's resources at this point in time.
Mm-hmm.
Because they have Afghanistan, they can put a pipeline across it, which I hear they're busy doing because they can get to Turkmenistan, which has probably 10% of the proven gas reserves in the world, untapped for the most part, but China needs them. They're busy building pipelines down from Russia. Oh, Russia needs to sell Europe their gas. Well, not if they can sell them somewhere else, right? So we're watching this very, very. This is to me this is shocking to see it unfolding this quickly, because what we're talking about is the United States had through the Monroe Doctrine, we had a policy in the Middle East which was, we'll be the policemen, you be the oil suppliers, and that's since Carter, right? Jimmy Carter put that in place. He's been building Habitat for Humanity ever since to make up for whatever happened, I guess. But it's that's a big deal, and I thought that was going to go away with more of a fight on our
Mm-hmm.
side, and it just sort of like fizzled out like a bad relationship. And just I don't know what happened,
Hmm.
but
Well,
and
it's interesting to look at
you
these
see
major.
Mohammed bin Salman, right? Just doing the fist bump with he doesn't shake Biden's hand, and they
Yeah.
make the they make the State Department guys like land on the far end of the field and they have to take like a golf cart over, no red carpets. It's very obvious what's
Mm.
happening.
Yeah, and respect matters a lot from what I understand to the Chinese. So we had several of our officials, or one of our officials went over and had to wait 4 or 5 hours, just a sign of disrespect. And and what concerns me the most is you've got these major global powers that are strategically making decisions from a long-term standpoint. They're looking at the world and resources with truth, and they're through the eyes of truth, and they're making decisions like this and exercising the power that they have to secure those resources from a long-term standpoint.
Mm-hmm,
And
mm-hmm.
and that brings to mind the fact that China just increased their export restrictions on rare earth metals and minerals, which all of our leading technology has to use a lot of those rare earth metals and minerals. So concerning from a long-term standpoint. I mean, and the hard part is this is all going to come to a head at some point, and the markets aren't going to be able to continue to act as if there's nothing risky on the horizon. Because even at some point, the markets are going to have to reposition, even if it's just assets leaving the US and being reinvested in other parts of the world that are making better decisions from a long-term standpoint. Because
Mm-hmm.
money, unless we have capital controls where that money can't leave the United States, which is always possible at some point in the future, um, investment capital will go where it's going to be treated the best. And at some point, that's not going to be in the US anymore.
Yeah. Yeah, I'm with you. I mean, but speaking of not in the US anymore, I am still really shocked by, in particular, this one, the German DAX, which I have my cursor on here, which is
Man,
indistinguishable from the Dow, which is indistinguishable from the S&P. But I'm picking on the German DAX because I've never seen a collapse in their industrial production outside. Like they're in energy intensive industries, Paul, have collapsed harder, faster, and deeper than they did in COVID. In COVID, they shut them down because of
mm-hmm.
lockdowns. Like they literally sent people home, and even in the construct of that, you didn't have a decline as deep. You didn't have a decline as deep as in the Great Depression. I mean, this is deeper. So they're having this complete destruction of their the beginning of the value chain, right? Like until you've made aluminum ingots in your energy intensive industry, you can't make BMW engine blocks, right? Until you've made your borosilicate glass blanks, you can't make windows and test tubes and all the other awesome stuff they make in Germany, right? So they've got this like literally mass destruction of their economy. I can't see that in here. Where is
No.
it? What's happening? you know? So I think that, I'm not at the point of saying that fundamental analysis is going to get you where you need to go. I think you have to just read the tea leaves. And right now my tea leaves say there's a lot of money in the system that's going to keep sloshing around for a while.
Yes.
But that's not investment advice. It's just one guy who's been watching markets a long time. When they do things I can't explain, the
Mm-hmm.
explanation is that means there's money pouring into them from somewhere, right? Because tops happen when you run out of buyers and bottoms happen when you run out of sellers, right? That's it's but in between those two moments, liquidity, liquidity, liquidity.
That's exactly right. And when the buyers start to run out, when you juice the economy with tremendous amounts of liquidity, and there's a willingness for people to buy on leverage, which we don't have a whole lot of leverage based on the numbers we're looking at the market, but that continues to fuel this. And the DAX to me is just something. When I look at the fundamental numbers, I'm like, this is insane. And I go back to, okay, what if this happens in the US? That yes, our numbers are declining, but they're nowhere near as bad as what they are on the DAX, but that market's still continuing to go up. As a fiduciary and helping manage money for clients and as an investor myself, that is the absolutely most terrifying situation. Because one, yes, you have the technicals that are going to point you in the right direction, and fundamentals are good. They tell you the ultimate, the value you're paying for that investment. But I always pay attention to the fundamentals and say, okay, what's the risk in here? If things go wrong, how bad can it be? So, and technicals are not perfect, but they can help keep you on the right side. They can help keep you in the trade as long as that momentum is there.
Yeah. Yeah. Well, good. So I think that's all I have for today. I am going to be seeing you. in a month or so, less than a month out in
Yeah.
Phoenix at the FLCCC conference, which I'm the MC for that, and very exciting. They've got a new strategy, and we've been doing a lot of work to help them do what they do. So that's going to be exciting. They have a limit of 500. They're already at 440, so I think they're gonna max this one out pretty quick. And it'll be both doctors and health enthusiasts, because want those two audiences to begin to commingle more and all that. So really exciting, good stuff. They'll be talking about all kinds of amazing things there, the turbo cancers, the vax injury, things like that. That you'll get to hear world experts talk about this kind of stuff. So I think you'll have a good time. Anybody else who's shown up, I know there's a number of Peak Prosperity people who are showing up. If we get enough, we'll have a quorum.
Oh, that's
You know,
exciting.
to fill
So
out have some little breakout sessions. I'm gonna do a breakout session too. I'm gonna do what they call a pop-up, a little breakout. I'm emceeing, but I'm gonna find time to hand off some duties because I wanna talk about how to rough title would be positioning your money for the next few years. Just to talk
yes,
about that.
I'm excited about attending. I looked at the agenda of the speakers. I mean, it's going to be a pretty amazing event.
Yeah. Yeah, well, these are super high integrity folks who are showing up, so it's just fun to be around them. So that's good time. So anybody who's thinking of coming, Phoenix, February 2, 3, 4, but it's filling up quick. So
Mhm.
you want to come? I don't know if there's even any spaces by the time you watch this. So
That's a good point. I know I had one of the hotel rooms that I had reserved. I filled it out, clicks like it's gone. I'm like, literally, this was 60 seconds ago and it showed you had plenty of rooms left. It was gone.
yeah,
So I did find
yep.
another hotel room pretty quickly. So you're right. It is filling up quickly.
Yep. Well, good. So Paul, I'm off next week. We won't be able to have this conversation because I'll be in Panama, so I don't think I can commit to anything there. So we'll take next week off, but I'll be back the week after. And so everybody who's been listening to this, thank you very much. Remember peakfinancialinvesting.com. If you want to talk to Paul and his crew, you can go through that portal and we make it very easy. And so it's going very well, and I'm just very happy with everything that people have said about how good it is, Paul, to talk to somebody who speaks their language. I
Well,
think
thank you.
everybody deserves that.
Thank you. We've enjoyed it. I enjoy the conversations, and as long as we can help people, everything else will take care of itself.
Yep, indeed. All right. Well, with that, thanks, Paul, and we'll see you in a couple weeks.
Thanks, Chris. I can't wait to hear about your trip.
I'll be excited to tell you. Hello, Chris Martinson. I'm the CEO of Peak Prosperity and also Peak Financial Investing. And after watching that, you're probably wondering, well, what do I do with my money? Look, you both deserve and need somebody who can talk to you about what's really going on in this world, understand the situation as it is, not be steering you towards certain things that don't make sense for you or just keep you in a game that's already ended. Look, if you want to talk to somebody about the petrodollar declining or what is happening with gold or which sectors are actually the best ones to be in, given what the Federal Reserve is up to or the federal government, you deserve to talk to somebody who can answer those and has a few gray hairs and has been there through some of the economic cycles because, hey, we're in another economic cycle, so it's good to have that experience. Fortunately, at Peak Financial Investing, what we do is we go out and we scour and we look for the very best firms out there who satisfy one thing above all else. They've got great experience coupled to great customer service. So if you want to come by peakfinancialinvesting.com, there's a very simple form you can fill out, just a few fields. You hit send. What happens is an email gets triggered out. It goes to an endorsed firm of ours. You will get an email back. You can then set up a phone call for a 30 to 45 minute free, no obligation, no pressure call to find out if this firm is a good fit for you and to find out if you're a good fit for the firm. It has to go both ways. And if all that matches up, this will be one of the best things that could happen to you this year. So please come by peakfinancialinvesting.com. Very simple process. We would love to help you if we can. Thanks very much.